Hi, it's Steve Chater here with TCT Property Management Services, and we are the resource for people building financial security with real estate. Today, we're going to be talking about a market update for September 2021 to keep you, our investors, informed as to what's going on with your real estate investment here in Phoenix, Arizona, because our goal is to help you build financial independence with real estate. So, quick summary, here's what we're talking about. We are in an extreme seller's market. The demand is rising again, it's increasing. Our sales prices are going up, and over half of the houses that we see that have sold recently, over half of them have sold for more than the asking price. In fact, the median amount over the asking price is $11,000. New single-family home permits, they're up 32%. We're building more properties. Our rents are rising. And the median sales price has gone up 25% just since last September, and we're at almost $413,000. So your real estate investment is doing extremely well. Hey, you can look, the year-over-year appreciation looks like this. Phoenix real estate has gone up a little over 32%. You can see San Diego is number 2, and Seattle and Tampa, and then on down the list here. But nationally, the national index has gained almost 20%, 19.7, and that's halfway up this table. Phoenix has remained at the top of this for appreciation for 26 consecutive months, a new all-time record, and your real estate investment in Phoenix is doing extremely well. In addition to that, not only have the prices gone up, but the rents have gone up as well. This is not the time to sell. This is the time to hold on to a property. The prices are increasing, your equity is increasing, your wealth is increasing, and the rents are increasing, so your cash flow goes up as well. So why is this happening? Well, our labor force, if we compare where we are, here's COVID, and you can see what happened with our labor force, and now we have recovered faster than the national economy, which took a huge hit with COVID and has recovered, but not near as fast as we are. Why? We have industries moving in. We have jobs moving in to Arizona. We have people and corporations leaving other states and other cities and coming to Arizona. If you look at this and you see what's happened, Maricopa has added more residents than any other county in the nation. So over the last 10 years, Maricopa County grew at almost 16%, while the United States grew at less than half of that. And then interestingly, in the people that are over 18, this is the workforce, we've grown at 20% or a little over that, while the United States has grown at 10. Our economy is exceeding the economy of the United States. Even though both of them are strong, ours is significantly stronger. So what's happening? Where's the buyers coming from? How is all this growth happening? Well, first time ever, most of our buyers are from San Francisco Bay Area. It used to be that Los Angeles was number 1, but now that's down to number 2. You can see Chicago at number 3. Seattle, Tacoma, Bellevue. In the past couple of weeks, I've worked with a couple of investors that are saying, I'm selling my property here up in Seattle area in Bellevue, and I want to buy some properties down in Phoenix. The investor demand in this area is huge because our rents are good, our laws are friendly to the landlord, and our population is growing, our jobs are growing, our salaries are growing. Mortgage rates, we know that that's what's helped in making all this happen, and they're remaining virtually flat. The Federal Reserve has not raised the interest rates yet. So by the way, if you have not refinanced yet, now is the time to do it. You could pull out some of the equity that you've just gained over the past year or two and actually acquire another property that's continuing to gain in equity for you, because our properties are still affordable. And if we look in this green shaded area, this is where the sweet spot is for the affordability index. And in the Phoenix area, we've continued to maintain properties right in the affordability area. Now we pop just below that line, but what they do is they take the median income and they say, could you afford the payment? And unfortunately, they're still using the income from back in 2019 and 2020. So we're not too concerned about it. We're going to watch it. But our properties are still way more affordable. One of the things that's happened, though, as people have been buying the properties and how it becomes more affordable is the actual size of the home that they've purchased has gone down a little bit. So it dropped about 100 square feet in this last year. That's about a 5% drop. And so what they're doing is just saying, you know what, I'm not going to buy as big a home, but I still want to own a home. And so our demand is really, really high. And the mortgage payments went up. No question about it. As the price of houses went up, so did the mortgage payments, but not a whole lot. And interestingly, the rents went up more than the mortgage payments went up. So as an investor, this is just the perfect time to acquire more properties. I'm acquiring more properties. Why? Because we want to lock in the low interest rates. We want to lock in the low interest rates and have somebody else pay that mortgage off for us. And with the demand for housing coming in and the fact that we haven't built enough housing over the last number of years, we're starting to come back and build more. But this is what we used to build, and we're just starting to get back to that now. So we're seeing the number of new housing coming up, but rental housing is in extreme demand. Now, how do we know this is going to continue? Well, this is what we call the Crawford Index, and it measures the supply and it measures the demand. And so it measures our market to see what direction are we going. So in this yellow area right here, this would be a balanced market where prices just stay stable. If it was down in the red, we'd see downward pressure on prices. But for an investor, it doesn't matter if the prices are pressed down because you're not selling. And as long as you have a positive cash flow, there's no reason to sell. We were all the way up here, almost to 500, and with a crazy frenzy in our market. And so it's cooled off a little bit, but that's 3.5 times more than the balanced market. Our supply is in the green zone. Our demand is in the green zone. And as I told you, it's increasing. And so what does this mean? It means we're not going to be going at the same rate of appreciation that we were here, but the prices are still going up. And so here's been the rate of appreciation we've been experiencing, and this is awesome. However, we're not going to be able to maintain that, and this is what we want to maintain right in here, the 4, 5, 6% range of appreciation. And with the inflation that's coming in our economy right now, it's reasonable for us to expect that we will see at least this 4, 5, 6. We'll keep pace with the inflation because that's what real estate does. So, quick summary. We're in an extreme seller market still, and it's going to continue for quite some time. The demand is going up. Sales over asking price is going up. And part of the reason for that is I just showed you all of those cities where they're coming to Arizona. They're cashing out with houses, and they're cashing out on average with $50,000 more equity out of those markets than we have in ours. And so they're willing to pay more and pay over appraisal for the properties, that's pushing our prices up. New home permits we're finally back to where we used to be as far as the number of homes being built. And our rents are continuing to go up. Why? Because people are moving here faster than what we can build houses for them. So the sales prices are going up, and it's just been a phenomenal market to be a real estate investor. It is the right market for you to hold on to your property. And again, I'm going to suggest if you've not refinanced, take a look at it. Consider doing it. If you want to see what your rents are, if you haven't increased your rent significantly over the last couple of years, talk to us about that, and we'll give you the best advice on what to do with your increasing your rents, increasing your return on investment, because we are the resource for people building financial security with real estate. We appreciate you. We appreciate your business, and we appreciate helping you build that financial independence using real estate. Thanks for taking time to listen to this today.